Hello and welcome to our YouTube channel Finbuzz Learning. Today we are going to discuss about stock split and its impact on the stock prices. Let's understand the stock split first. So whenever there is an increase or decrease in the number of shares company stock without changing into the shareholders equity, it will be called stock split. Now there are two types of stock splits, forward stock split and reverse stock split. Now let me explain you both type of stock split and their impact on the stock prices. Let's start with forward stock split. So forward stock split is a type of split when there is a number of share increases and the price of the share decreases. Let's understand it from an example. A 2 for 1 forward stock split, which means your holding will become double in size. So if you hold 100 shares at the price of $10 of the company, then it will become 200 post forward stock split and the price will become $5. Now the company generally announce forward stock split to reduce the trading price of the stock and make it affordable for the investor. Now we will understand how the prices of shares calculated or adjusted into the market due to the forward stock split. So there is a term called adjustment factor which need to be calculated before adjusting the historical price. Let's take example of 2 for 1 stock split happening on day 4, which is also the X date, as also shown into my presentation. To calculate adjustment factor, we will divide the number of share before the split, which is also called old share, by the number of share after the split, which is also called new share. So 1 divided by 2, which comes as 0.5 adjustment factor. Now we will calculate the historical price multiplying the price from adjustment factor. $11.50 multiplied by 0.5 is equals to $5.75. So if you see, we have calculated the historical price before X date minus 1 because the stock will trade post split basis from the X date. Now coming to the reverse stock split. So a reverse stock split consolidates the number of existing share of the stock held by the shareholder into fewer shares and increase the stock price into the same ratio. Let's understand with example where 2 for 1 reverse stock split happen. A company would take every 2 shares and replace them with 1 share. So if you hold 2 shares of a company, it will become 1 post reverse stock split. Again, for calculating adjusted price, we must calculate the adjustment factor. So here we take the example of 1 for 4 reverse stock split. Hence, we will divide the number of shares before the stock split, which is old shares, by the number of share after the stock split, which is also called new shares. So it's 4 divided by 1, which comes 4 as adjustment factor. Now we will multiply the stock price with the adjustment factor. As we discussed, we will now multiply the price with the adjustment factor. 12.25 multiplied by 4 is equals to 49. So the closing price will be 49. One important thing to note is that we calculate the adjusted price for the open, high, low and close and the volume for the day. Also get adjusted by dividing the volume by adjustment factor. Also, the historical prices are adjusted to maintain the price gaps due to the corporate action we have seen. It will help us to do an effective analysis of the stock. Thank you for watching our video. Please hit the like button and comment if you have any question regarding our content of the video. Also, we request you to please subscribe our channel so that we will be encouraged to create more videos on frequent basis. Thank you all.